Ladies and gentlemen of the crypto space, we're live on a Wednesday, September 22nd at 12:10 p.m. Let's get this party started. Let me restart my browser. 1 second, guys. Apologies. Okay, we're in business. Topic of today, less is more in the crypto space. The vol is blinding. It'll drive you nuts. How the hell do you handle the emotions of this stuff? What you really have to do is peer through the madness, see the trajectory, understand a bit of macroeconomics, and have a little bit of faith. Faith in what? Faith in greed, and it's not greed. And well, there's two factors of greed that I could touch on. One is speculators, which overwhelmingly account for the volatility that we experience, and the other one is greed that the legacy system does not want to be on call when the legacy system collapses. So they want to preserve their wealth, their value. It's all such a strange game that we play, and we could always count on greed. So that gives us at least a very predictable indicator on market actor behavior, which is extraordinary and disturbing simultaneously, and interesting and informative. So, what did we have yesterday? I'm going to show you the charts. We're going to look at S&P futures. We're going to look at all the stuff that I like, and we'll try and get a sense of the market. Let's pop on the main screen and see what's going on today. I mean, this thing bounced. This thing bounced in an extraordinary way. Um, you know, bears will look at macroeconomic conditions and say all sorts of things that are fearful. And we have to think of how to process that fear, that emotion, that anxiety. We have to think of our convictions, and we have to make our choices, and we have to live with them. This thing could collapse significantly. Very fragile. So a news headline out of China is what induced this bearish market action. You guys know what I'm talking about. I'm not going to dive too far into the Evergrande saga. But surprisingly, or maybe it's not so surprisingly, it held on the 100 SMA on the daily. I mean, the chart's extraordinary. It's just straight up. Not that this would be anything I'm interested in having as a position, merely because it does not allow me to express the way I view the markets, the way I express my engineering and software knowledge. It does not reflect on who I am and what I'm interested in, nor where I think the future is. And that's meaningful. Where you deploy your capital should be thought of as a way you're expressing yourself, like poetry or art or whatever your craft is of choice. We have to respect ourselves. And there's no respect in these markets because you're playing with all the legacy financial actors and what they did and how they perverted the system. So the crypto space is the only place for me. Now, I don't mind the battery tech play, which you all know I have, but I think I like that, and I see a bit honor in that position. I've had it for years because it represents the disruption of the legacy energy system, and that's big deal. So hang your hats on big deals, define narratives, tell yourself stories, find conviction, and be prepared. Be prepared for lose 30, 40% of your money. And then it goes back up, and then it goes back down. But over time, a rational time horizon, the trajectory is obvious, especially for plays that have an extremely strong narrative. Let's see what's going on in the comments today. We'll look at the other charts as well. Good morning, guys. J Dogs in the house. Go DGB. I have all the hopes in the world for Digibyte to receive the appreciation it so meaningfully deserves. Living amongst them. Good morning, Captain. A pleasure. Enoch, what's up, Noah? Nick made it. Raul, hello. Quantified. Ice baby. Yeah, I have the ice chart up. Alex, new hat. Yeah, it's a nice hat. Nice hat today. Crypto bets here with my magic money. You guys know we like that nowadays. Heck of a narrative. We'll talk about it. Dan, hey Noah, are there any gaming metaverse projects that you're interested in? Gods Unchained is the only one I'm quite interested in. I've had cards for almost 2 years now, and Very valuable cards. It's a very fun game. And Noah, can you speak about how MIM stays on peg to the dollar? So MIM or stablecoins are a fascinating concept. It's an asset. They're all assets. Dollar is a unit of account from a sovereign currency, so it in itself is $1. So that's quite different. But with regard to the valuation of assets, stablecoin assets, their dollar is derived from, the markets, the balance and LP position. So the more liquid the more liquidity that are in the pools, the better on peg it will stay. And obviously, collateralization is a factor in market sentiment. So, if something falters at the software level with regard to the algorithms and the expected behavior of the liquidation process, so on and so forth, that jeopardizes the peg stability because now people are like, I'm going to get rid of my stablecoin and get into something else because the collateral is now in jeopardy. So that's the way it works, and that's why I'm not too fearful of any of the stablecoins, really, other than from a regulatory standpoint. But if Tether loses peg and it goes to 70 cents on the dollar, people are going to sell Tether. Just like if asset A goes from a dollar to 70 cents, people are going to sell asset A. And then, for a variety of reasons, maybe news of recollateralization, meeting margin call expectations, the asset Tether goes from 70 cents to a dollar. People are going to buy it because it's going up in price. They'll make 30% on their money as it regains peg. So there's a lot of the fear associated with stablecoins is just a lack of appreciation of really what they are. There's no direct correlation, in my opinion, between collateralization and the peg, the mysterious peg. That really is about treasury and economics and just a platform, a protocol. So that's a brief, quick rundown of the way I look at stablecoins. Um, so MIM stays on peg just like any of the other stablecoins. Dan, nope, I hit you. I hit Crypto Best. Joe, there are only three things you need to do to be successful in the crypto space after determining which asset you have conviction for. Buy the dip, hold forever, take your yield. Yield, more coin. So everything that I've always talked about still stands. The assets we've chosen have shifted, migrated, transformed, evolved over time, and we talk about that in the form of narratives, in the form of stories, and we use logic and reason and rationality, and we make choices like grown-ass adults. We put on our big boy pants, and we make the tough choices. My core portfolio has been the same for quite a long time. Core portfolio meaning the largest position. I hit my target quantity for CVX CRV, and I'm quite content with it, especially considering the technicals. Very big volatility, and we know Curve has always been extremely volatile, particularly because it's extremely liquid. It's a decaying hyperinflationary asset, so there's a huge amount of coinage, so it goes in wild swings. But what you have to do is step back and understand the macro perspective or the macro properties of it. You know that it's a decaying disinflationary asset. You know that it's net disinflationary basically on a daily basis, if not full on deflationary quite often and potentially in perpetuity because of all the actors that want to control the curve monetary policy using the gauges, especially protocols. Obviously, the Convex protocol and Yearn are big parts of this. Stake DAO and Badger, and folks are accumulating CVX treasuries and also Curve, because Curve, in the form of VE Curve, can be used to affect the gauge vote, the gauge weighting. So, you know, I don't think the protocols are really destined to accumulate curve because of the leverage that CVX provides, significantly more power to influence the curve monetary policy. So that's pretty much set in stone for me. Protocols. CVX is for protocols. CVX, any protocol that wants to control curve monetary policy will accumulate CVX. because powerful leverage. So I don't see CVX as an asset for us. You could speculate all over the place for its price, and that's all. That's all fine and dandy. We're speculators in the end of the day, whether we're buying and selling or we're holding a long-term position with conviction. We're still speculating. So this appreciates in wild swings up to $15. Looks like it's forming a very initial um, triangular compression because he got higher lows and he got lower highs on these enormous wicks to the upside. So how this plays out over time, I don't know. I don't want to speculate on it. It's just not a position for me. Now, plenty of folks will have different opinions, and that's okay. We talk about them. Ask questions. Ask me questions. That's what the stream is for. That's okay. But that's my opinion. I don't see CVX as an asset for the people. I see it as an asset for protocols to have leverage control over curve monetary policy. On the other hand, CVX CRV is the perfect asset for retail. Capturing curve monetary policy, capturing convex monetary policy, and capturing transaction fees on the platform. Interestingly, my speculation is over the coming years, the transaction fee component, the 3-curve component of CVX CRV yield, will significantly or will be significantly more than the incentives from the curve and convex monetary policies. I think the transaction fees, if everything goes as 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 would make sense to go, we see multiples in total transaction volume on the platform. 100x in 4 years, 1,000x in 4 years, maybe. You're doing $10 billion a day in transaction fees. There's only so much curve out there, so that's going to be a heck of a distribution of transaction fees to parties that hold governance rights. Anyway, I digress. What else are you guys talking about? Chris, good morning. Trevor, get some coffee today. $4 for a cup of Joe. Yeah, Joe's doing good. Now, I had a Joe position. I don't have one now, and that's okay. I think Joe's going to go ballistic more likely than less. And from a speculative standpoint, I would like to play it. And my mantra is I can't own everything I want to own. I have to respect myself and the way I want to and how I express my opinions in the form of a portfolio, and that's okay. And I expect it to go up. So take that as something to understand a little bit about me. I expect Joe to go up significantly, especially with Avalanche Rush, especially with Banker Joe. Yet I'm not holding a position. What does that mean? What does that mean? If I would liquidate it. If it went up tenfold, I would liquidate it and take significant profits. But that means now I have to give 30% of that to the federal government in the form of protection money. So they don't come after me. I have to pay them their protection dues. And that's not something I want to do. So I don't want capital gains. I want to avoid capital gains at all costs. I think it's not just a burden. I think it's an insult to the way money is handled. And that's just something that's very meaningful to me. F-Dub, how do I take advantage of the stablecoin narrative? What is the play? The play is predominantly Spell, in my opinion. I believe this is the biggest narrative in the entire crypto space right now. Makers making moves. Makers swap their in-house algorithm to a Uniswap V3 position to manage their DAI and USDC and whatever the hell they're doing, but it's still backed by USDC. So frankly, if everything comes out clean through the regulatory pipeline, that's cool. And in that regard, it puts kind of Maker in an interesting position. So depending on the regulatory outcome, a position in Maker can be quite significant from a stablecoin play. And depending on how things play out, non-fiat backed stablecoins, digital stablecoins backed by digital assets, can be possibly the biggest play ever in crypto, in my opinion. If you see a 10x, a 20x, a 30x on this asset, because fiat-backed stablecoins are regulated and have to go through Treasury for compliance purposes, which kind of seems obvious, like they're going to have to do that. That's going to cause ripple effects for USDC and USDT. And we don't know exactly how that's going to play out. I don't think it's overwhelmingly bearish from a crypto market stability standpoint. They'll have to have a process. You don't just evaporate money. That's when you'll have riots at Capitol Hill. But now if you have to liquidate all your, actually, it'd probably be short term, extremely bullish, maybe volatil, volatilely bullish or bullish in a very volatile way, where everyone has to liquidate their tether because now Tether wants you to transfer your tether back to the tether company so you can redeem your original assets because they need significant restructuring. And then all of a sudden, everyone owns assets rather than the stablecoin. So that could be a way it plays out. It could drive prices of assets significantly through the roof, forcing people out of the cash position and into the asset position. But if fiat-backed stablecoins don't play out optimally or overwhelmingly favorable, it leaves a massive, massive space in the market for digital stablecoins, and there's only a couple. I think MIM might be the one with the most potential, which justifies the size of the position I have, which is extremely large at this point. But on the other hand, there's alternatives. There's Frax. There's Andre's fixed forex, and there's Terra UST, and that's not a position that I've taken. I don't have to own everything I want to own, and it's okay to see things do well. And I have a small position in Keeper, K3PR, KP3R, which is Andre's profit sharing asset for fixed forex, and amongst other things, it gets revenue from his data sources. And Frax, I have a decent position in Frax. I think Sam is quite impressive the way he talks about his vision, and they have deployed very impressive protocols, and I'm quite impressed with that. FXS 1559. It's heading in the right direction, in my opinion. So the most conviction I have actually is with Spell, and my communications with the development team have been spectacular, to say the least. Half of your conviction comes from really understanding who's building these projects, and I'm quite impressed, to say the least, with their character, their demeanor, their interest, and how they've handled the choices and options presented to them. And there's just an endless amount of choices and options, and when you see good ones being made, that's quite meaningful. Um, so that's effed up. Stable coins, yeah. 42 people in the stream, 20 likes. We can do better. Quantified Gala Games. A lot of meta stuff is coming. It's very early, very early. More lobby. Today wasn't that bad. Evergrande didn't do much to the market. Yeah, so if anyone sold like yesterday, was that good? I think I was able to come out unscathed. Portfolio's down for the week, but I have assets that are significantly up. I mean, this Spell is significantly up for the week. I got 100% on this bad boy. In fact, between Spell and Ice, I was able to account for the volatility in the curve position, which is recuperating very nicely at the moment. But that thing was up at $3.40, like a good $400,000 or $500,000 drop. Which I can you imagine? Can you imagine the stomach? Imagine the stomach and the nerves or the capacity to deal with the anxiety associated with watching such volatility. But that's where I am, and I watch 6-figure swings, and there's people out there that watch 7-figure swings, and probably people that watch 8-figure swings, and I'd be one of them. If my portfolio does what I expect it to do, I'll be watching 7-figure swings at some point in my life, and I'm prepared for it because I've seen these markets for all these years. I know what they are. I know what they mean. I know where they're heading. I know the big picture and where crypto fits into the macroeconomic landscape. And I wouldn't hesitate for a second. This is the place to be. With Gary Gensler talking about $5 a week, and if you're in college, and 8% interest. I tweeted about it. If you guys haven't seen my tweet like 30 minutes ago, that is the most ridiculous press conference or whatever the hell it was I've ever seen. That is just actually financial malpractice or something. Like literally telling someone without a question of doubt how to lose money to kids, no less. Like that is literally the antithesis of even remotely reasonable nor decent advice. In fact, that following that advice is guaranteed to hurt them in the long run. So given his position at the SEC, it's quite disturbing that that was the information that he made the choice to provide. That's the last thing someone in college should ever do is save cash. That's when you can take maximum risk. And I mean, I will take risk any day over a guaranteed, without a doubt, loss of money. And cash in a bank account is guaranteed, no questions asked, to lose money over time. Financial malpractice, likely. Um, Best way to start my morning, Daniel. Always a pleasure. F-Dub, I wonder if you can advise the best way for me to get USDT that's in my MetaMask to another network. Which network? You won't be able to get it to Atom because Cosmos hubs aren't really set up with cross-chain liquidity. But you want to go to Joe, you go to the AVAX bridge. Bridge.avax that network, and you put tether on the top, tether, and it'll transfer to the AVAX network, and then you use Joe. You go to Trader Joe, Trader Joe XYZ, and you put tether on the top, and then you could buy whatever the hell you want. There's a whole lot of assets on Avalanche. You'll need your Avalanche configuration in MetaMask, which you could Google for Avalanche configuration in MetaMask, and it'll show you how to do it. And it's really as simple as that. I know many folks haven't done it, but that's really how simple it is. If you want a screenshot, you could screenshot this or scroll back to it when you guys have time here. I mean, this is it. You configure this Avalanche. Here's the API, chain ID, and to go back, it's in networks. You go to settings. At the bottom of settings is networks. You add a network, and you populate that, and then you'll have one of these. You'll have Avalanche. And now it switches to Avalanche. Avalanche connects to Trader Joe, and bing, bada, boom. That's how that works. Not bad for 30 seconds, how to get capital and how to trade on Avalanche. So, roll the tape back, pause the show, and that was the whole deal. You don't have to read documents or, burn your brain too much. You pause the show, you see the properties in MetaMask, and you saw the bridge, the URLs, and that's how you do it. Simple as that. Brasileiros. I definitely screwed that one. My man. Yield, Mo Coin. Love you, Noah. Thanks for sharing your knowledge and rants. Yeah. Thank you guys. Thank you guys for giving me a place to share my knowledge and rants. I wouldn't be anything without you guys. Daniel, do you think AMMs are here to stay? The yields are huge. I'm just worried about their long-term sustainability. The yields are not necessarily huge. There's two things. One, a lot of yields, like 500%, 1,000%, are because of incentives, and incentives are often inflationary in the asset that's being used to incentivize behavior. It's all game theory. It's all about incentive systems and affecting the behavior of market actors. So any yield that's incentivized, that's sustainable, will be derived from transaction fees, or maybe from an MMT perspective, it must have a deflationary pressure or at least a disinflationary pressure. Otherwise, excessively inflationary incentivized emissions are going to debase the crap out of the asset you have interest in. And that's all over the place, like stuff like this. I don't even have it anymore. But there's they're called pool twos. At least that's what Messi and I call them. I probably got that phrase from him. But they tend to be hyper inflationary. So, you just, they're not the assets of choice in any regard. When you see 5,000% returns, you're going to get screwed if you're just holding the asset. Now, if you're staking the asset and you're getting the 5,000% on the asset, what'll happen is the asset price will go down 90%, but you'll have 10 times as much of it. So, in order to play that game, which I have no interest in, you actually have to be getting a huge amount of return on the hyperinflating asset, which is basically the premise of things like uh, Olympus DAO and Wonderland, which are quite different because they have a remarkable bond concept, which is extraordinary to say the least from a monetary policy and protocol crafting perspective, especially Olympus DAO and their pro, where bonds as a service. That's quite fascinating, um, and that's novel. That's big time novel, actually. Um, I often tell people I'm never early and never late, and I do that for a reason because I need to understand things before I ever participate in them. Not that I have an Olympus DAO, an ohm or a time position, but over the coming months and coming years, they could prove to be something special. Actually, it's quite possible. Um, so yes, AMMs are certainly here to stay. Raul, can you explain bonds? Got a bit late yesterday in the stream. Think you already spoke about it. Bonds with regard to what, like government bonds, death bonds? Um, that's a complicated topic, my friend. Well, bonds are useless with regard to legacy financials. Some speculate that the entire system goes maximum risk off, like have a deflationary collapse. In which case, the only thing that retains value is dollars and bonds go to like -15, -20% yield, and we have some ridiculous financial conditions. In which case, the price, the face value of the bond goes through the roof, goes up 20, 30%. That'd be crazy. Um, It's not a game that I like to play. It seems very, you know, disastrous if that ever occurred. So it's kind of like a scavenger, in my opinion, folks that buy bonds expecting the price to go up 20%. Now, what the fuck is a 20% rip on bonds going to do for you? I think it's just the worst trade. It doesn't make any sense to me. There's nothing sustainable about buying bonds, hoping we're expecting the price of the bond to go up 20%. What the hell is a 20% rip going to do for anyone's life? It's not sustainable. You're going to have to liquidate it. It's basically just, you know, uh, an opportunity for capital gains on bonds. That's just ridiculous. Um, Daniel, if I get paid entirely in crypto, will that affect my taxes? Yes. Anything you get paid is income tax. Noah, what distinguishes FXS versus Spell? A very different protocol. Frax is going for their CPI peg. So the point is, what Sam does at Frax is creative, and it's what he's envisioning, and it's his ideology, and that's meaningful, which means he's an artist, which means he's crafting something that he himself sees in his mind. And when you buy like FXS, you're kind of attaching your value allocation to um, his vision of what he wants to create, and I like that. I've heard him speak enough to want to attach my capital to that vision. And Spell is similar because I've spoken to and I know internet know the folks behind Spell, and you get a sense of persons, and I find them genuine, and also the protocol structure, the properties, the way it's built. I think it's quite meaningful. So I think both are quite meaningful in distinct ways. Um, I think Spell has a massive amount of cross-chain traction, and that's a big deal. I mean, there's liquidity cross-chain, and they're going through any swap to get in and out of Arbitrum. That's a big deal. That's a big deal. So I think Spell is by far in the lead with regard to digital stablecoins. Frax is a big deal. It's never lost peg, and it's quite interesting what they do. They take as collateral a questionable asset predominantly now with USDC. But what they do in their treasury is they take that USDC and put it to work in yearn vaults, which generate returns, which means Frax has a capacity to become over collateralized. And when it's over collateralized, what they do is they mint Frax, which puts more into circulation, and that Frax is used to buy FXS on the open market, and they burn it. And that's what FXS 1559 is. That creates a deflationary pressure on the FXS asset. So very different protocols, very different strategies, but I am quite intrigued by both of them. They're both part of my core protocol. 6 positions that account for 90% of the portfolio. Jake, also curious why you don't have X Sushi. Can't own everything that you don't want to own. I just can't own everything, and that's a heck of a brand. You have X Sushi. You're playing the sushi game, which is FTX. So that's a heck of an asset. That's a productive asset. That's a collateralizable asset. You could collateralize it on MIM, collateralize it on Aave. That's crazy. So that's a heck of an asset. I think other assets would do better. So I see opportunity cost associated with the position. But the fact that Sushi Swap is on every damn chain, remarkable, the product that they've created out of a fork of Uniswap V2. Ah, Ahmed, my man, morning cap. Glad to get to enjoy the stream today as well. F Dub, thank you. You're very welcome. Magnus, new to the channel. Why do you not recommend Binance Smart Chain? Because it can be shut down, and that's real. Until they're effectively decentralized, which they're not, it could be shut down. And I don't want to use something that's handling my finances that could be shut down, especially in a foreign country. I don't trust it. And trust is everything. I trust in Ethereum. It's not going anywhere. Capital on it will be accessible. Information stored on it will be accessible. I do not trust Binance Smart Chain in that regard at all. And it doesn't make any rational sense to trust it when there's other protocols that are significantly more trustworthy. I mean, even the questionable characteristics of Polygon, Avalanche, and Phantom with regard to their bridges and their smart contracts, and even RenVMs are questioned, rightfully so. They're all questioned, rightfully so. But compared to Binance Smart Chain, they might as well be unquestionable. I mean, Binance Smart Chain is the flip of a Chinese government switch away from just being shut down, in my opinion. It's just obvious. Oh, Peter, fairly new to your channel. What's your thoughts on Omen Time? I spent a couple minutes earlier talking about it. I don't have a position in either. Obviously, it's all speculative. In a couple of years, we'll find out. We'll find out the answer to that speculation. But I think they're extremely novel. Extremely novel. Potentially disruptively novel with regard to providing a functionality that didn't exist prior to it. The notion of bonds in crypto and building a treasury. So the value of Ohm and time are backed by a treasury. So there's a floor price. So in many regards, the price is extremely overextended. So the floor price is, that's the base price that they should logically have because that's the quantity of capital in the treasury. So there's a lot of room for them to go down. They've been pushed up significantly because of speculation, but that's okay. What they are is overwhelmingly viable experiments and intriguing experiments. not necessarily viable. They still have to be proven viable, but I think they make perfect sense now that I understand them. So I'm just more intrigued technologically how things play out, and I'm not really in a position to speculate. You guys know by now, I minimize my risk. I don't need to speculate. I can't own everything I want to own. Look, I told you guys about Joe. Expected to go 10x. I don't have a damn position. So what does that mean? You don't have to own everything you want to own. Well, it can. 32,000% return is going to debase the crap out of time. But if you lock your time, stake your time, the yield on your time should outperform the debasement. So if you put 10 in and it's worth 1,000, and then in a year you have 5,000 that's worth $5 instead of $1,000, that's a good part of the logic of the protocol, which is why, in many regards, we have to see how things play out. Um, I think it's quite interesting, and I think we only know in hindsight how the longevity of a protocol. But the fact is, it's building a treasury, and I think that is an extraordinary concept in almost all regards. I think every protocol should have a treasury. Look, protocols are accumulating CVX so that in a treasury, so that they have a capacity to control current monetary policy. So bonds as a service from Olympus DAO offers functionality to protocols such that they could build a treasury. And they could convert that treasury to be denominated in CVX. And now they have CVX that they could wield to affect the current monetary policy. That's serious stuff. Peter, you're welcome. Living amongst them, could you please do a 30-second on how to acquire Spell and interface with Abracadabra? Yeah, Spell is there's good liquidity on Sushi. So you go to app.sushi.com and you pop Tether on the top or whatever stablecoin of choice and put Spell on the bottom. Oh, I'm connected to Avalanche. They're working on Spell liquidity, I believe, on Avalanche. Still ways to go. But you got Spell, and you buy Spell. Good slippage, good liquidity. And then you take Spell and you go over to Abracadabra and you let it load. You click the stake button and you put Spell in. And you click stake. And now you have the URLs. Now you know where to get it on Ethereum. There's good liquidity on Phantom. So if you go over to Phantom blockchain and oh, there it is. Spirit has good liquidity. So if you go back, go to the main interface, you go to exchange, and you want Spell, and you have Tether, and you buy Spell. And you get good liquidity here, and then you can bridge it back using, any swap works. Any swap or multi-chain, and that's how you bridge capital back from any. Oh my God, any swap dot exchange, and that's how you bridge capital back from Phantom, and then that's Phantom mainnet, and you have Spell. So there's pretty good. It'll just swap. There's more than enough for Spell to swap over, and the same thing here. I don't know if there's Spell. Nope. Looks like it's just any swap. So if you want to bridge Spell back from Phantom, you get your Phantom on your Spell on Phantom. You could use any swap to get it back. There's the URL, guys. There you go. Killis, a pleasure. Joe, why is BSC more liable to shut down than Polygon? Because BSC only has a couple of servers, and therefore they're susceptible to government intervention, whereas Polygon has public nodes, and people are staking, and it's more public. It's more decentralized. The word is decentralized. A lot of folks don't come from the old days of UTXOs, and that's really why Digibyte is meaningful. And people really don't like Chris Black is very, he's right. And it's hard to hear, it's hard hitting, and people question why he's so critical on protocols, but because of decentralization. And decentralization means there's no one party that has effective control over a protocol. But the less centralized the protocol it is, the more secure it is. Ethereum is overwhelmingly secure. Nobody's shutting down Ethereum. So you put money on it, you're cool. You put money on BSC, there's ways for it to be shut down if shit hits the fan, and your money go bye-bye. So that's the deal. Jake, what is the cheapest way to get fiat on chain and off chain? Well, there's always fees involved, but I opt for GUSD using Gemini. That's just me. There's plenty of ways, especially out of the States, but in the States, for me, it's GUSD and Gemini. When looking at comparable projects, what's your view on the growth potential for ICE? There is no comparable projects to ICE, in my opinion. You got Visor, but they're not the ICE team. The ICE team is basically related to Abracadabra. They're all a crew of devs, and they're all tightly connected, and they're savants. They do things that most people can't do, that I can't do. If I had time, I could contribute and participate being a software engineer. But what they're able to create in such a relatively short period of time, few and far between. So certainly savants in that regard. So ICE stands alone, in my opinion. I shied away from ICE for a bit, but getting to know the dev team, motivations, what they're working on, why they're working on it, what they're building. This is a big deal. And, you all have to make your choices. Pfizer's doing a lot of stuff. And it's just something you can't own everything you want to own. Alex, how to bridge Phantom Spell to Ethereum. AnySwap, like I just showed you guys. Boom, boom, boom. Obviously, the text comments are delayed. I do the best I can. I thought you could only stake Spell on the Ethereum network. That is correct, but you could buy it on other networks. So, for instance, I just showed you guys how you could buy Spell on Phantom to get a good swap rate, bridge it back to Ethereum, and stake it on Abracadabra. Any interest in deploying capital to Solana? No, not until RenVMs get their H to H, which is basically going to be Solana's cross-chain bridge. So that's one reason. There's not enough cross-chain liquidity. Two, I can't own everything I want to own. And in order to own something, I'd have to cannibalize a current position. And that's not something I'm in a position to want to do based on my digestion of the potential for projects on Solana. The last thing I want is an asset that's gone up a huge amount of money. People often say like 50,000% or whatever the heck Hex has gone up. That's the last thing I want to buy. It's gone up so much. Past returns have no indication of future return potential. So if you ever hear anyone ever tell you something has gone up a huge amount as a reason to buy it, they don't get it. So Solana does have a little bit of that feel, being, what was it, the last time I saw number 8, top total market cap. So there's a lot of hype for Solana. I don't want assets that have hype. I want assets that people are like, not understanding, or they're misunderstanding them, and I identify them and I could define a narrative for them where it's freaking serious. And to me, right about now, Abracadabra and Spell really fit that mold, because who the hell understands this shit? I do. I could tell the story. I've told the story. I just told you guys the story. It's going to take a while for other people to appreciate it. But when they do, I was early. And that'll play out with Curve as well for myself. Curve, a year and a half later, is still not understood. But it will be, and its price will reflect that new understanding when this damn symmetric triangle breaks. Could take another couple months. December. This thing could go into January, February. Could totally go into February. But that's all good. This is a heck of a triangular compression. I saw you tweet about the Curve Saber debate. Yeah, Saber kind of took Curve's code, and unlike, oh my God, what's the name of the swap protocol on Binance Smart Chain? Oh my God. I should really know them. They kind of give me $3,000 a week. I should probably know the name of them. It's just so much information. Uh, EPS, Ellipsis. Yeah, Ellipsis gave VE Curve their dues. So the fact that whatever the heck they're called, I don't even know their name. That's kind of disappointing. Curve can be built on Rust. Yeah, but they actually use certain code and talked about that code in the source code. It's not about can it be built on Rust. It's about copyright. And it's about just respect. Like they didn't reach out to the team, they didn't talk to them, but they literally use their code. And Curve's code is not open source, free to use. It's open source, free to use with attribution. And they didn't, like, look, check this out. Convex, supported by Curve. Ellipsis. Let's see if Ellipsis says it. Might have to connect to BSC. 2 seconds, guys. Binance. I'm surprised they don't say supported by Curve. Medium, Telegram, risk, claim, airdrop, stake, EPS, pool. I would think that here, look. Aha! 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 Would you look at that? This is called respect. That's called respect. This is called respect. Do I have to say it again? SBR. It's not a debate. I'm showing it on the screen. It's disrespectful. And that's not cool. Do you think they will let you bridge SPEL? I don't. I have no idea. I don't know if SPEL is an actual asset. I'd have to verify that. It might be a deposit, so I'd have to verify that. Daniel, if Binance got shut down in China, would that affect all the AMMs built? Well, if Binance got shut down in China, nothing would work. Every AMM would be non-functional. Your capital would be confiscated. Everything on Binance Smart Chain would be non-functional. You can't bridge. You can't do transactions. You can't do anything. It's gone. That's Binance Smart Chain. Doesn't Solana already have a wormhole? Yeah, but it has basically no TVL, and it's pretty wonky, to say the least. But guess who owns or works with and has partnered with RenVM? They partnered last year, I believe, or maybe it was earlier this year. But that's the bridge. That's going to be the Solana bridge. But RenVM is so much more because it's a bridge everywhere. And that's why I've talked about Ren all these years, since March of 2020. RenVM is the ultimate cross-chain bridge. When you use a protocol like RenVM, are you exposing assets to cap gains? No. Gray area, but no. And I would argue because there's a disconnection in the transaction process. It's basically a deposit with a receipt. Even if you're going hard on taxes, token tax even did processing for me, not considering RenVM deposits as a taxable event. So you can take BTC, put it onto an EVM compatible chain or a smart contract blockchain, and you'll have RenBTC, but that's not a taxable event unto itself. And I'm pretty sure, and I feel pretty confident, that is quite logical. So if the IRS ever asked, I'd put together a presentation and be like, yeah, dude, you're not taxing this for this, this. And if you want, I'll talk about this for 45 minutes until your ears start bleeding. It's not a taxable event. They'll fight you on it, but it's just technologically not a taxable event. Literally the way the protocol works. F-Dub, would it be cheaper to do it through Phantom? So Phantom has good slippage for Spell if you're interested in it. But Sushi as well, so it's all good. Reading more about Spell and FXS, both are fascinating protocols. What would be your best bet to get involved without getting eaten by ETH fees? Yeah, man, interacting with Frax is expensive, but there's no interaction with Frax. So, depending on your conviction, I locked mine for 4 years. You know, food for thought. Um, I'm on. I'll show you guys. I'm on Binance. That's why. Yeah, 23,474 FXS locked for 4 years. I can't touch it. I have to watch it go up and down for 4 years. I I lock things. It's like 100 grand, give or take. Can't touch it. I can't move it. I can't do anything with it. 114 grand it's worth right now. 112. 4 years. So sometimes you speculate. People speculate different ways. Some people want to buy low, sell high, but my speculation's like, yeah, I'm going to come back in 4 years when this thing's worth 20 mil. Okay? Ellipsis. Thank you, Daniel. Sup, Posh? Captain, what are you adding during this dip? Nothing. I haven't done any transactions. Better late than never. Always a pleasure, Mixed. Oh, wait, do you think about DYDX? Chain data showing huge daily volume. Good profit sharing too. Yes, DYDX is interesting. I want my airdrop. I was expecting a $75,000 airdrop. Thank you, SEC. BNT looking dead. It is what it is. I have a BNT position for all these years. Um, I like their team. They're very smart and they're very prudent. So it wouldn't be a core portfolio position. You guys know my core portfolio position. 1, 2, 3, 4, 5, 6 positions. Joe was one of them for a bit because I moved my Ethereum position over to Joe. But since then, I broke that position in the Popsicle Finance and a bit more Spell. Damn. Broke off like 120 chip for Popsicle. That's worth 166. That's cool. So between Popsicle and the Spell appreciation, it accounted for the curve volatility over the last 2 days, which is currently down $312,000. Got to have stomach for this, boys and girls. Woo. Yeah, long term Iris. I got a nice Iris position. I think I have like 30 grand worth. Um, no, Ren does not equal Wormhole ZK. Wormhole is older tech, and Ren is Ren protocol. And Ren's been around way before Solana was anybody knew about Solana. Ren has been around. Do you have a position in Terra? I do not. Can't own everything I want to own. All right, ladies and gentlemen, we're going to wrap it up for today. Wednesday, September 22nd at 1 p.m. As always, thank you all for joining me. Tell everyone to subscribe. After party on Discord. And that's the deal. Let me know if you have any questions. Ping me on Twitter. I'll see you guys tomorrow. See you then. Peace.